Hello, I'm Angeline Ong, and welcome to a look ahead to Wednesday, the 17th of January. Now, we start with China. The key indicator to look out for there is the Q4 GDP growth rate, retail sales numbers, and also industrial production and fixed asset investment as well. But it's the GDP growth rate that will be the key one to watch, because many market watchers who were expecting that big reopening from China are now starting to realize that actually China seems to be prioritizing stability over growth, and really the big reopening wasn't on their cards at all, possibly. From the UK, we've got the Consumer Price Index, Producer Price Index numbers as well, and also the Retail Price Index. We've heard from many grocers out of the UK recently, and it seems to be a robust Christmas that most grocers like Sainsbury's and Tesco's have had. But although they've seen strength in the Christmas food front, it's been rather weak on the general merchandise. Also, watch out for the CPI, because that will give us clues as to what the Bank of England might do if the Fed cuts interest rates. And the Bank of England, certainly, the expectation is it will hold or keep its rate steady for longer than most, even after the Fed does cut. Speaking of the Fed, we've got retail sales figures out, important export prices, industrial production, and that NAHB housing market index. The big one, of course, is retail sales and the housing market data, which will give us a sense of the consumer strength there. Just looking at the US 500, like many of the other indices, it's seen that big rally from October onwards, and then we also saw that Santa rally after the Fed pivot. Although we're seeing a bit of a consolidation phase at the moment, and it is currently not yet able to punch through that resistance level at around 4,799. But what the Fed does in terms of interest rates will be key to how these indices perform. And as I mentioned earlier, the market, rather, according to the Fed CME watch tool, still expecting a cut in March, but the expectation has been weakening for that time frame recently, given we've had robust labor signals and also stickier than expected, or rather hotter than expected, inflation recently out of the US. Oil prices, another key factor that will drive what the Fed does. Any comments or any sort of indication that the Middle East tensions are escalating and not calming down will make the Fed think twice about cutting rates, because, of course, weaker oil prices might in turn drive up inflation. We've had some details already today. Breaking news from the Wall Street Journal. It says here that Shell has suspended Red Sea transits indefinitely after the escalation of attacks. This is according to the Wall Street Journal, quoting sources. Meanwhile, we've got a couple of earnings as well. We've got Antofagasta and Galliford Try out with first half trading statement for Galliford and Q4 output for Antofagasta. And from the Netherlands, look out for justeattakeaway.com out with a trading statement. If you want to know more about trading in this space, look out for my video on justeattakeaway.com versus Deliveroo. And also, Axel Rudolph looks at the technical charts for those two stocks. Out of the US, it's all about Alcoa out with Q4 earnings, which will drive the earnings season for the miners. Well, that's it for now. For more market moving news, I'll be back on Beat the Street at 13:30 London time to give you a heads up to the US trading day. And IG's Jeremy Naylor will be on at 7:30 on early morning call ahead of the European market open. Follow me on Twitter at Angeline Ong and at IGCom. This is IGTV.